Got it. Okay. I think we're good, right?
Yep.
Okay. Hi, everybody. Welcome back. January 25th, 2022, to the last meeting of the Post-Secondary Education Financing Working Group pursuant to Public Act 21-62. I have my notes up here. I'm Representative Jason Doucette, one of the co-chairs. Jeanette Weldon, the other co-chair. If you'd like to say hello, get started.
Yes, hello everyone, and I just wanted to thank everyone for sticking with the process and for all of your valuable contributions.
You're here. Yes, it's been great. We've got a lot of great contribution, and I think we are really only scratching the surface. This is a huge issue. We tried to just take one little piece of it, and I think we have made some progress and had some good discussions, and certainly more to spurn some of the other discussions that will take place both in Connecticut and across the country on this topic for many years to come. But it's certainly timely, I think, both on the national level and in Connecticut. And I appreciate everybody's contributions, and I hope that we continue to stay in touch, and perhaps even one of these days get to meet in person. Those of you who haven't had the pleasure of meeting in person can make it up to Hartford. As I understand, we may be reopening our campus at the state capitol soon. Don't know exactly the details of that, but presumably it will be happening very soon. Okay, so what I thought we'd do, and this hopefully should go quick, but we'll take a look at the draft report that was sent around. We had a draft to review over the last couple of weeks. We entertained some comments and suggestions that were sent by email. Only had a few, but basically, if you sent comments or suggestions, they have been incorporated, or we have done our best to make sure that they were incorporated fully into this final draft. And I think it would be a good idea to go through the report quickly, page by page. It's not very long, and see if anyone has any additional comments or questions, clarifications, certainly any clerical mistakes or anything like that that can be cleared up. And again, I want to encourage everyone here to feel free to contribute. There certainly are no bad ideas, and by virtue of your membership on the working group, you fully have the right and ability to contribute your ideas here to the record, as it were. So with that, Dawn, if you can scroll down. We've just got the title page and the table of contents. I think we've got everybody there who participated and was appointed, and a little asterisk there about our friends from the Student Borrower Protection Center who have participated. That's just the language of the Public Act. Okay, here, identifying the problem. This was basically just the presentation that I had put together for the first meeting, just to try to frame the issue and kick off discussion. I'm not sure if anybody has any thoughts on other pieces or elements that can be added to that. But again, I think this is just sort of scratching the surface from some sources that I was able to find, and some articles and so forth. And the question, I think, hopefully this frames the issue in a context we've been talking about: does lack of access to affordable financing options for low-income borrowers in Connecticut contribute to these problems? And if so, what can we do to help? So before we leave that, anybody, feel free to chime in as we go along here. Anyone?
Representative Doucette.
Yes.
Hey, this is Bruce Adams, and this is a quick typographical matter in the acknowledgements section of the people who are appointed to the group. You just have some names, including mine, that are last name, first name, and others that are first name, last name.
Okay.
So I just suggest that you make them consistent.
I'll fix that.
Okay. Yep.
It's a heavy hitting comment, I know.
Yep. Okay. That's what I expect from you, Bruce. All right. Okay. And then we kind of get into the meat here. And, what, I thought was best to do here was to try to synthesize the conversations we had, which is, difficult in some respects to do in the 3 to 4 pages you see here. We had several hours of discussion, and we had really 3, I guess, substantive meetings. This would be our 5th meeting, so it's sort of the bookends of the meat, as it were, are sort of synthesized here. We've done our best to cite sources from the various materials that came through. Jeanette had a lot of good substantive revision to this section, and maybe Jeanette, I'll let you kind of talk about it from the Chesla perspective of sort of the relevant data that rises to the level of including in this report.
Sure. So I think one of the things that's in that earliest paragraph on the page is just trying to set the context that, there are many aspects to financing post-secondary education, and, lending is one tool, obviously not the only tool. But with regard to Chesla, we we tried to capture the role that Chesla plays as a self-supporting state-affiliated nonprofit entity. We tried to explain some of our operating constraints, such as the fact that, we don't get our money straight from the state. We actually have to go out and borrow the money that we use to make student loans, and then, we have to pay back what we borrowed so that we, are able to continue to make new loans. And so that becomes, sort of an operational structure that is a bit constraining, but that's what we have to work with. And then tried to capture just kind of the a key takeaway from some of the slides we presented on our approval and denial data. And, what it shows is that, I guess it's really sort of goes with what you'd expect. 70% of approved loans were for income levels of 50 to 150,000. 64% of denials were for families with in the 20,000 to 100,000 range. So obviously there's some overlap in those ranges, which means there's, approvals and denials in both categories. Also tried to highlight what Chesla does to try to educate students and parents on what their options are for paying for higher education expenses, and that includes our outreach program, which we offer to all high schools in the state, and the financial literacy module that we have on the website. And then the last paragraph there is what we've touched on, I think, sort of throughout the course of several meetings, about if there were additional state support, there could be other ways to approach some of these issues, particularly, access to state funding could allow us to relax our underwriting criteria. So that was really, those are the highlights.
Okay. And that last piece, I think we highlighted as well in the possible solution section or recommendations at the end. So maybe we'll touch on that when we get there. As we move on here, you know, we talked about the breakdown of federal loans versus private loans. And I think that was interesting because I think we had some discussions and really in some respects started with the premise that, you know, the private loan market was something that we wanted to get a handle on. But it is, in fact, a pretty small slice of the overall lending. And then there's some discussion here of the, let me see if I just skipped over anything.
Actually, Representative Doucette, could I add to that
yes.
point? This is Winston Birkenbreen. Although
Yes.
it is correct and the report accurately reflects that it is a smaller slice of the overall funding, it is an area where the state disproportionately can have an impact, right? Because the federal program that represents, 85 to 92 only has very particular policy levers that a state or sub-state government could pull, whereas the remaining 8 to 15% is entirely subject to state authority. So although it's a smaller slice, it is maybe the most valuable bang for your buck on state leverage in terms of that. And I wonder if just including even just a clause to sort of say that, you know, that market is more comprehensively covered by state oversight might help sort of balance out the seemingly smaller slice with the opportunity for policy interventions.
That is a good point. And I think it may have, it's a little out of order, but I was just going to say, Winston, on page 8, right above where it starts talking about the New York State Get on Your Feet program. There is a paragraph that I think sort of covers that. I think with your comments that you sent in. So we'll take a look at that and see if that should be further tweaked or amended to get to that point. But that is definitely a valid point.
Yeah, I don't know that maybe a line edit itself needs to be made, but maybe just to keep in mind as we go through the rest of it and look at the recommendations, if there is a comprehensively, if we need to do any rebalancing of weight given towards federal versus private student loans and the purpose of the report. So happy to hold tight on proposed specific edits, but wanted to flag that in real time while we were discussing it.
Yep. Okay. And then right above that is kind of a summary of the key takeaways from the TCAS report. There was a lot in there, and we had a pretty wide-ranging discussion on that report. So I don't know if anyone has any thoughts on whether or not that's a good summary or anything else that we may have missed or worth pointing out or needs clarification. Going once, going twice. Then after that, there's a summary of the New York State Get on Your Feet program, which I think was an interesting program. Just one example. Perhaps there are others out there. Again, with the time we had allotted, we took a look at this one, but it's an interesting program. It seemed, I know Zani, who's not with us today, because he has moved on to another office of state employment, but he had made some efforts to try to find some additional data on the utilization of that program I'm not sure how far he got. We saw that it awarded 2 million to 1,925 students in 2018-19. Perhaps it went up from there. Would be interested certainly to know how it looked in 2020, or if there's any forecasting or what's happened with that program. I think the key takeaway is that it is a good concept. The parameters could range wildly on how we qualify borrowers and set criteria as to who can participate and how much money we would want to spend on that sort of program. And then of course we had the question of whether or not the federal income driven repayment program is a good one to associate a state run program with. So again, scratching the surface here, a good concept that maybe bears some further investigation. All right. And then after that, there's just a short summary of the Office of Higher Ed's presentation. There may be more there that we would want to flesh out. That's on page 9, Dawn, if you want to go down, there you go. I included the figures that were shared with us on the overall funding levels. I included a reference to the discussion about the cap, but did not want to, I guess, make a recommendation or suggest that was something that we would necessarily recommend, but just that it was discussed. I think that my basic understanding of that was that there are a few different scenarios as to which how we could change that program, and changing the cap is one of them. But certainly, I think we all would agree that changing the funding level would be more important if we had to choose how to augment that program. So anything just on the background part of the report there that anyone wants to add?
If I might, I'd like to jump in for a sec.
Yeah.
So I know it's come up a little bit, from me as a representative of the private lending industry. And I know I had one call where my call was garbled and cut off, but I'm pretty sure I also submitted some data to Dawn about a loan guarantee program that had the state refinancing student loans with the participation of the private lending industry. And I just think it's important to put a comment in there that at least, I know the statute, we're talking about CHESLA, and as CHESLA can explore opportunities to partner with the state in new ways, I think it's fair to include in this report the opportunity for CHESLA to look for partnerships with private industry as well. Perhaps just as a marker for the future, but it was discussed, and we have capital to leverage.
Okay. Is that a discussion point, or is it a recommendation?
I would just recommend that there be, a comment put in the page 6 section, what data says in Connecticut and possible solutions.
Okay.
I'm not asking for anything more than that, but the subject was touched on, and I think it's important to capture.
Okay. Anyone else have any thoughts on that?
Jason, this is Julie.
Yes.
I just think back to that state report. I'm just, I'm concerned about listing that bottom line about the statutory cap, removing that statutory cap, because I think that will be problematic to the rest of the pure need-based program that's campus-based. And we didn't discuss that, but is it true that there is some kind of study or there's some statute or something going on within the state for an overall look at the Roberta Willis program in general? Is there something? I'm not sure. I know they're talking about it. I don't know what kind of working group is being developed, or that there's not something already going on within the state that might already be discussing that. And
There's definitely a lot of discussion on it. But as to anything specific, I'm not sure. Anyone else who has any info on that can chime in. I mean, on the legislative level, I know I've had just a few sort of sidebar discussions recently with folks who, were not involved with this group or the banking committee that are also interested in that. I had a talk with Representative Elliott, the co-chair of the higher ed committee recently, and so I know others are definitely looking at it. And I think the purpose of this report is to put that issue on the forefront as well. Keep
right
it there.
So I would just be a little bit concerned about how we write this last sentence to make sure that we're not endorsing something that was discussed as a possible solution that may in fact kind of disrupt in an unintentional way. I think unintentional.
Right.
I think the intention is good to be able to, for a number of reasons, that 30% cap, I'm not sure whether it's good or bad. Because I know how it's affecting the need merit piece. But that, I am concerned a little bit about the pure need-based piece and the ability for us to deliver to students who need to make decisions in a good way if they remove the cap in the way that they were suggesting.
So perhaps we need to qualify that last sentence there by just say after it says needy students, comma, although there is some concern about the implications of doing that within the
the current statutory limits of the program. I don't know how, and the understanding that perhaps maybe as an overall the program needs to and whatever else you're doing within the state. I mean, you can find some additional information on what exactly is going on within that. Maybe a reference to that as well. To the work that's being done by others on this level.
Duly noted.
If I can jump in as well.
And Julie, sorry, go ahead, Krista.
No, go ahead, Jenny.
I was just going to ask Julie, do you know the philosophy behind setting it up so it's not just need-based, but that there's also this need merit component? Is that a philosophy that we want to perpetuate, or is it a philosophy that we want to say, let's revisit that because we think it should maybe just be need driven?
I think that philosophy was born out of trying to maintain a certain representation from the prior programs that existed, which was the like the capital scholarship program that we had. That was that transportable between states, and it was rather very small. So I think it was trying to preserve some of what was available in the prior programs when we developed both of these. And yes, these students are needy. They are as needy as the other students. They do tend to get a little bit more, but again, it's not reaching very far, and I think that whole component between the two needs to be revisited. I would think that from the state level, from UConn, the other institutions as well, just in discussing it with my colleagues, I think people would feel the pure need-based component, we may be better served as a state with that right now.
Yep.
In that regard.
Yep.
If I can just quickly add, I think the other thing that I think the only thing that I think is missing, and I think this ties these 2 points together, is at the section where it says it was noted that funding for these scholarships has been cut in half since its peak level of 64, right? 64 million 2008 to 33 million. I think what's missing in there is the wanting, like the number, the numerical value of like wanting to go back to peak funding, right? Because there were needing to make these decisions of need-based, merit-based, because it's, to what you both said. But the reason there's not enough to go around is because there's just not enough to go around. We went from 64 million to 33 million. So no matter what happens, less students get served. So perhaps in here is to, part of the conversation is that we need to be able to go back to peak funding, or to get a goal to go back to that peak funding so that we don't have to make those decisions, so that need-based and merit-based folks, if that's how we want to approach it, can have access to what they need, as well as need-based students, period, might have access. So need-based, because my understanding is that is need-based and merit-based, they're both together, and then there's just need-based. And so I think that if we can get to peak funding again, we might have to make less tough decisions about who gets what.
I agree. I think that's it. I think from the financial aid perspective of the world, that's a valid point.
Okay. So I think that goes to our recommendation too, and I was going to ask when we got to that next page there, if we wanted to kind of flesh that out a little more. So I think we covered that. And that brings us right into recommendation number 1. And, we just basically jotted down here a short summary of these recommendations. We can add more narrative, I think, to this, or we could just leave it short and sweet like that. So recommendation 1, to increase the overall level of funding of need-based state aid. So again, we want to go back to where we were in 2008. But I guess with that, I would question, whether or not even that was the right number. All right. And what the true need is now, given the cost of the higher education and, the escalation of costs and tuitions over that time period, and what the true need really is. So what does everybody think about that?
I mean, this is Josh. I think it's a good point. I mean, I think we need to at least get back to that peak, but I think it should be an at least amount, because as you noted, since 2008, I mean, the cost of college continually goes up. So I don't think that should be the target, and that's the absolute what we're okay with. I think it should be at least that amount, and see if we can go even higher.
I agree with that as well. I think at least that, right? But also at least there's a number, but with the recognition that it needs to be this, whatever that number looks like in the future, like for now, adapting to today's numbers and today's need.
And we may want to align it with the fact that there are, where we sit amongst all the states towards the end, as we are the lowest funded of all those, and we have the highest debt, that we want to maybe continue to rebalance that, so that we can, we're not saying that we want to be at the top, that we want to be the best of the best with the lowest debt and the highest amount of grant assistance, but that maybe we want to come to some kind of balance within the middle. Just looking at the data, that may give us a sense of maybe where we should be.
Okay. Yep. So Dawn, do you want to make a note of that in our notes here under recommendation 1, that we're going to say it should be
What would you like?
at least to 2008 funding, and in any event commensurate with the what the estimated need is relative to the cost of financing higher education in 2022.
The cost of higher education in 2022?
Yeah.
Yeah, I think that's right.
Okay.
Um,
I'll take the lines off that when we get done because it's
Yeah.
in edit mode and I can't do it at the same time.
We can always
And-
frame it as, sorry.
and I was just going to say before I forgot Julie's comment about, trying to bring Connecticut up relative to other states,
So we
the
need
level that
to-
we're funding our scholarship programs. Yep.
Like something like same or similar?
And I think it's in relationship because we're talking about the loans. And one of the reasons why our loan debt seems to be relatively high is the direct relationship with the very low grant assistance our students are getting. So I think that that's the statistic from the reports that we may want to highlight in there as well.
So something like Connecticut ranks X number in the national contribution to state funded higher ed, to bring to something like that, because that names the data point, and then to bring Connecticut up to par, or to balance that out more, or to bring Connecticut up to par, we need to, yeah.
Yeah, and perhaps looking at it as a rebalancing of our high student loan debt to our relatively low grant funding, something of that nature, that we could look maybe perhaps rebalance that.
Yep.
Tell me what to write, or we'll go back and do it after, Jason.
Yeah, we'll go. No, yeah, we don't have to get it perfect right now. We'll just, I think we get the gist now. We take some notes and we kind of make it flow better after. Okay. Good. Recommendation 2. Consider option for state supported loan programs, perhaps including an income driven repayment option, pattern off the New York State program, or an interest rate subsidy program for low income students through CHESLA. So I think those are the two. Certainly, Bruce touched on another possibility for, a loan program, the state sponsored loan program. Does anyone have any other thoughts that they want to add about these two, or anything else in terms of a specific loan program that would be directed at student borrowers that we're trying to help here?
Well, if you're, this is Bruce, if you're looking at the a certain loan program like the one I was referencing, it would be loan guarantees, which would, the basic operation of that is that the state dollars would guarantee private dollars, so its leveraged impact would be greater in the marketplace.
Yeah.
So you could use the term loan guarantees.
And that would be similar to what was recently done with the Small Business Express program in DCD, where the state was actually the actual lender, but it was moved to a guarantee. So it provides more leverage in the private market for our financial institutions.
Right. And maybe the way it could be phrased is when you say consider options for state-supported loan or loan guarantee programs up top,
Okay.
when it's sort of combining it there.
That's fine with me.
And then
Yeah, I
you
think
wouldn't need
that's
the
good.
reference at the end.
Okay. We might want to add something still at the end just to again cover so it's clear what we're talking about there. But I'm curious too if anyone has any thoughts first on the New York State style program or a subsidy program. Jeanette touched on it earlier. We had some examples like the teacher's loan subsidy program. I guess the question is, and we can leave it broad at this point, but does anybody have any thoughts on specifically how we might structure a program given in light of the discussions that we've been having?
I think it could really be a combination of programs. I mean, I think if you look at the New York State example, it impacted a certain number of students, but it seemed like not the majority of students. So I think maybe it's a combination of programs that will, touch different subsets of students.
Yeah, and I would add to that in thinking through I agree, a variety of programs, right? And as Bruce said, leveraging a guarantee, a state-backed program is more on the origination side. I'm curious whether the state would have an appetite for maintaining its own portfolio and servicing its own portfolio. I mean, you could envision a sort of buyout program where the worst performing loans get bought out at some penny, some percentage of the dollar to make sure that lower income borrowers who are struggling to perform on their loans don't go into default, and then all the harms that comes from that. That might be a way to leverage. And I know some other states have discussed, especially at a time where there are budget surpluses across the country. So I do think there are a variety there. In thinking through the New York Get on Your Feet program, I do think any program that Connecticut entertains, there's a balance, right, between making sure it's for Connecticut and supporting Connecticut, and you want to have residency requirements, you don't want to have all those things, but also if you narrow it too much, who does that help? And I know that the New York program, I think, even has a requirement that you be a graduate of a New York State high school. And I think that Connecticut wants to be a welcoming state, right? We should just question whether even having an undergraduate graduating in Connecticut requirement is a good policy idea, because you should be welcoming, smart graduates who want to move to Connecticut and work, and have this be an incentive too. So in addition to the breadth of types of programs, I think there should be some more flexibility and eligibility requirements than we see in the New York Get on Your Feet model.
Yep. That's a great point.
And some of that modeling exists at CHAFA with their emergency mortgage assistance program. It's a place for modeling resource for looking at how to use, to essentially purchase underperforming loans and keep people out of financial ruin.
Yeah, there are plenty of models out there for that, for the guarantee programs. And as Matt alluded to, that's sort of the way that we're shifting our small business lending in Connecticut. So I think there's quite a few examples out there for it. But yeah, Winston's point is a good one.
For the financial literacy, particularly in related to student loans, something that came up in another group that I was a part of, wondering if there's a way you can connect, particularly like student loan education, to when students get their grades for their report cards, right? Like you have to go online, and I don't have a child, and the last time I got a report card was a paper one that my parents had to go pick up. But I'm wondering if there's a way we could use that portal where students would presumably go in order to either link to different financial things, start them thinking about, what the cost of a higher education is going to be, other resources and everything. I don't know if that would work, but that might be, it's a place where people go.
Yeah, I was going to ask for you, but yeah, I'm sorry, Jeanette. I was just going to say, as we get into recommendation 2, I was going to ask for some specific examples if people wanted to add some ideas like that.
Mm-hmm. I was just going to mention, sort of consistent with that suggestion, Chesla's website has a financial literacy component to it that we are, looking at ways to increasingly, make those who are going to the website just for borrowing purposes to also, take a look at the financial literacy information at that point. So that's something we're giving thought to.
What we don't have here is actual stats on utilization of financial literacy options in Connecticut, and we don't have a really a clearinghouse for, let's say, the largest financial literacy outlets or the populations that are accessing them. And I think once we know how to segment the financial literacy space, we can do more with that information. And it's already a hot button topic, and I suspect it will be big in the session this year anyway. So I wonder if the recommendation isn't to, track the data and cut it, analyze it. What's being offered? Who's accessing it?
How would we get that? And where would we be getting that?
Well, I would suggest it's not a scientific thing. It wouldn't, purport to be a complete data set, but I think, I don't know if it's OLR or the DOB or Chesla, or I don't know, but I would think that, let's say, throughout 2022, for those, some people can go out and seek data and ask, how many students have reached, what's the utilization on your website, etc.
Yeah. So maybe say something like enhance opportunities and determine most utilized access points for financial literacy education or something like that.
I mean, I think we got to know what people like to give them more of that.
Right. I think we can keep it general enough to indicate that, you can't enhance opportunities without knowing, sort of what opportunities are already out there and how people are utilizing them. But also, I think it would go, in terms of financial literacy education, it certainly would go beyond what lenders are doing. It goes back to, how this can be made part of school curriculums and things like that. So I think there's a broader aspect to financial literacy education that I think it'd be nice if we could reference.
Yep.
To build on that and just add to the reference points to look at from outside of Connecticut, I guess, is there's currently pending in the New Jersey legislature a bill that would make completing the FAFSA high school graduation requirement. So you unless you are completing it or meet one of the exemption categories, you won't graduate high school. I think that sounds a little intense, maybe, right? But I think there's something to think about, to Matt's point about where are there natural points of contact to reach students and their families at a point when that's helpful, and the FAFSA being, the gateway to a variety of federal assistance. And then also, New York definitely has this. I thought New Jersey already did, but I see a bill here relating to it. Similarly, just as a existing touch point for financial literacy without putting the full burden or onus on the borrower or their family, is there are something called college shopping sheets. So this is basically where a school will use a formatted document to tell you what your financial aid package is. And there's a federal form, and then certain states, including New York, have created a state form and state supplement to really make sure schools are providing the kinds of information that the state requires, such as average debt borrowed, average financial aid, average graduation rate, et cetera. And the purpose of these forms is to create an apples to apples comparison for schools that students apply to, so they don't have to themselves figure out, how do I compare this, four-year public institutions debt burden to this four-year private institution to this two-year community college, et cetera. So it's, again, I don't want to, and I think I said this in prior meetings, I think financial literacy is important. We should think through it. We should figure out opportunities to leverage education. It shouldn't probably be the silver bullet that we're putting all of our eggs, into that basket, but these are models that other states have used is comparison tools between financial aid packages and debt burdens between schools, and looking to FAFSA completion rates and how to increase that.
So on FAFSA, we did have a proposal. I don't believe it. Well, it didn't pass. I'm just trying to remember. I can't recall if there was some element of that FAFSA requirement incorporated somewhere else into some other policy or legislation. But we did have that same discussion in Connecticut a couple of years ago. Well, the second point, it had a name. You said what did you refer to it as?
They're called a shopping sheet, the college or financial aid shopping sheet.
Okay.
And again, there's a federal version, and then some states, or a financial aid shopping sheet, and then some states, including New York, have provided supplements to make sure that whatever the state thinks should be communicated is supplemented to the baseline federal program.
Mm-hmm. Jason, those in Winston, those are now referred to through the federal government as the college financing plan. There's been revisions to that. I believe most of the colleges and universities already present them. I know we present them to all of our students. And there has been a state emphasis on being able to provide that information to our students. Just recently, the federal government was also requiring the student acknowledgement on loans, and in fact now has reversed that and is now not a requirement, but asking institutions to make that available as an option. We were requiring it as our students. We now can't require it, but we are suggesting that it be there. I believe most of the financial aid offices in the state are at least doing that. So I think we're fairly well covered in that respect. We also have the net price calculators on on all the institutions of financial aid, because those are a federal requirement. So I think we are all trying to move towards common financial aid award letters, the college financing plans, having these, the disclosures are very important for the alternative loans or for the private loans. So we are still doing that. So there are a number of things that we're actually doing that kind of move from, the federal requirements to the state requirements. Yet the financial literacy can extend itself further. And I think Jeanette's point is a good one. We need to start more, I think, on the high school levels. We need to get into that. We've been working real hard with this FAFSA challenge that's been part of the state for this past year, as we've realized our students are not filing the FAFSAs as well as we would have liked them to. So I think there's lots of things going on, but yet there's more I'm sure we could be doing. But I think, kind of a general and enhancing the opportunities and the current things that we have from the federal levels to the state levels to the institutional levels and throughout all of the educational systems in Connecticut, and work together, I think, to provide some of the best, the best of breed. But we are doing lots of things out there already.
A question that comes to mind, or like a sort of like something that comes to mind, is the FAFSA situation, right? There's a lot of young people, or a lot of people that cannot fill out their FAFSA depending on their family dynamics, right? Whether it be their families are not releasing their tax information, I was an admissions rep. And so there was a lot of situations where students couldn't get access to their parents' information, couldn't get access to filing the extra paperwork that they have to do to be able to be counted. So that, I think, affects young people's ability to even sometimes fill out the FAFSA. So there's that avenue of that. I mean, I know when I was a young person, my mom didn't even know what a FAFSA was, so I had to do everything by myself. And so she just said, here's my stuff. But I also know a lot of students whose parents will not give them that stuff. So I think the FAFSA, that's a very unique thing that happens, particularly with it. I think it happens in Hartford a lot. It just happens in general where people may not have access to their families' taxes to be able to fill out the FAFSA. So the requirement, I understand the need behind it, but also like the reality might not necessarily be there for folks to be able to do that. But in terms of being able to share out these graduation sheets, I think it's important that I'm glad some schools are doing it, but I wonder if then the answer is that there is a centralized place where these things are held, that schools know where they are, that they are able to provide them to their students, and when they're applying to colleges, right, at the high school level, so that easeful, because I find that when I was navigating, it was hard to find easeful information.
Yeah. Yep. No, I think that's a great point. I was thinking the same thing, and while we're discussing it, it's probably worth mentioning too that we've had other discussions unrelated to student loans per se, but within the banking committee, and most recently, as I was just talking to Rep. Delnicki about this today, we had some discussions with the treasurer's office. And last year we passed in the House of Representatives a bill that would have allowed the treasurer to set up what he was calling his financial literacy trust, which the way that it was to work was to partner with community organizations to try to get that information out to people who need it. So that's a concept that's still very much on the table. So that would be another way to do it, to have sort of that centralized place where we can get that information specific to student loan, college planning, out to the people that need it in the communities that most need it.
I have a quick question. Do we have a sense if every high school across the state participates in like financial aid nights? Because that's no cost to the high school. They can have a lender or a financial aid office present to their students and families. So do we have a sense if all the high schools do that? And if not, is there an opportunity to kind of make that a requirement at each of these high schools?
Not sure. It's a good question. Maybe some folks within the industry might have a better handle on that. But
well, I certainly know that there are some. We're invited to some. There's certainly not things that, even though we put our services out there, we're not. It's up to the high schools whether they want to do them or not. And Josh, as you know, you'll see some want to, some have different formats that they would like to use. Some actually have FAFSA nights where they'll help families complete their FAFSAs and do a number of things of that way. So high schools are doing various things. Is it across the board? I have no idea. I can only tell you what we know from our experience and the ones in which we're involved with.
Right. And going off of that, I'm just wondering how many high school students are missing that information because their high school is not being proactive in that regard. Like I said, it's no cost to the high school. They bring the experts on board from the industry, whether that's Chesla, a financial aid office, or another lender.
Yep.
Yeah.
Okay. All right. So that recommendation 3, I looking at it again, I think it should probably say, and determine the best access points for financial literacy. And we may even want to list some of the things we just discussed. But we can go back through that. In the interest of time, why don't we move on to number 4, about data from the private student lending industry. I'll let Winston talk a little bit about this and his expertise in this realm. But I think this is a good point. I think we started with the idea of really trying to get a lot of data on loan approvals, income levels, underwriting, and this is not easy data to to find. So I think it goes to the question of, how well do we really understand the market? And that's an important component of this. Winston, what do you think?
Yeah, thank you, Rep. Doucette. Just to sort of build on that, and I may have mentioned this in a prior meeting, so I'll keep it short and then happy to follow up if helpful or if needed. But to exactly that point, like if a state is trying to make decisions about a certain market in its jurisdiction, it's having actual data that reflects that market is sort of the best move if possible. And increasingly, states are creating something called like a lender registry, and what that basically means is, unlike full-blown state licensure, which Connecticut does for any number of financial service providers, in that case it's a come to us, get approval to do the business that you're doing in Connecticut. A registry just says, you're doing business here, we would love to know about the business that you're doing, provide us answers to these rubric Excel sheet questions, just give us data basically. So Maine, Colorado have passed registries like this specific to student loan origination and lending over the last year or two. California and Illinois have also, through slightly different laws, done the same thing. And the idea is that student lenders are just a function of state law, are legally operating without much interaction with their financial regulator or banking regulator. And that's just, a function how state law works, and that you can be not quite actively on their radar through no fault of anyone's, unless you're lending at a certain volume or lending at a certain interest rate, et cetera, which most student loans don't hit. So the idea here would be, all right, we want to make decisions about the private student loan market in Connecticut. Let's get some information first before we start doing something more, if needed, something more impactful on that market. And so Connecticut could do exactly what those other 4 states have done and adopt that regime, which is a relatively light touch regulatory intervention, because for the banking regulator, it's not full-blown licensing. You don't have all the responsibilities that go with that. You're just collecting data. And for the industry, this is data on themselves that they frankly already have. And it's not, in terms of regulatory compliance, not a huge lift to comply with that kind of thing. The way that Illinois, and then I'll stop here, but the way that Illinois was modeled is that it actually incorporates the schools a little bit and tries to get at that. It was a law called the Know Before You Owe Act, and it tries to get at exactly as the name suggests, like making sure lenders and schools are providing certain information to students beforehand, before they originate loans, whereas the other 3 states are much more about focused on the origination, focused on the lender. So Connecticut could do that here, in this session or in a following session, and really get some data related to what's happening within its borders. And I don't know if it is on the drive, but I sent a little memo to the working group to Dawn, and that folks should feel free to look at that. And if it's not already on the drive, maybe we can circulate it.
Okay.
I believe I put everything in the drive that anyone has, but
Great.
It's very possible I missed something.
I didn't look, so I don't want to presume that it's not there, but thanks, Don.
Any other thoughts on that?
Well, I mean, from the
Yeah.
banking department's perspective, the devil is always in the details of this. So we just need to look at this a little bit more. We would be concerned with the registry competing with our licensure. There are stuff around confidential supervisory information, particularly a lot of underwriting standards are proprietary to a particular lending institution. Interest rates vary from institution to institution, from borrower to borrower. But we would just need to take a look at Colorado, see what Illinois has proposed, before we'd be able to really make a lot of comment on that. But those would be some of our concerns.
Yeah, and thanks, Matt. And from a banking participant, and I think we'd look to reiterate a lot of the same. I think devil's in the details of specifically what would be asked. But I think anytime new regulation is introduced, then I don't know that I'd ever agree that there's kind of light touch regulation, right? There's significant complexity and expense, for lenders to try to ensure that we're compliant, with that. And doubling down, I'd also say I don't think that there's necessarily agreement that lenders aren't regulated here already, right? We have large, national regulators that are watching what we're doing here all the time. So
Yeah,
I
and
think the devil's going to be in the details there.
Sorry, and just to respond to what that's certainly always devil's in the details. The 4 states that have done this are certainly ironing out those details for themselves, and Connecticut can figure out what would work for itself. But I gave citations to statute and code in the memo to those other states. And in terms of whether any lenders are regulated or not, you can be regulated, but that doesn't mean you're providing information or the information that's needed. And although the state of Connecticut could always make a request to a non-licensee, it would have to do that via goodwill and or subpoena, right? And that's not a way to comprehensively do something to get a market snapshot. When I worked at New York State's Department of Finance, the regulator in New York State, as the student loan ombudsperson, we frankly just could not tell you what student lending looks like in New York because it's not data that is required to be provided on an annual basis. And I think whether it's light touch or slightly heavier, it is still a reasonable touch of regulation for a state to want to understand the market operating in its jurisdiction. And I think there's creative ways to do it. Doing the registry is certainly one way that I think is a reasonable balancing of effort and the importance of the information. There's also a variety, citizens and other student lenders are very sophisticated actors. There are potentially less sophisticated actors. And frankly, if some of those folks can't comply with a pretty simple data request, that's almost a more interesting thing to have uncovered, is to see who's actually doing this work. Not everyone is a particularly good actor, even though a registry approach isn't about necessarily ferreting out bad actors.
Okay.
And if
Well, this
It's
isn't
true, but I would
Go
say
ahead.
that in Connecticut here, we do have access. There is some of that information that we can access. We just can't make it public because it's
certainly
supervisory information.
Yeah, and the way that other
So-
states have approached that, I think, is aggregate scrubbed. They go into all
Right,
of
we
that. 'cause
wouldn't
it's
we wouldn't be
similar.
able to provide anything to a specific licensee or anything. We may be able to speak in broad terms on some of that information, but protecting our process and our information so that we can do the proper enforcement actions is certainly paramount in our mission in protecting Connecticut.
Certainly. It's just sort of funny, right? And this is not unique to Connecticut. It's only these other 4 states that can start to do this. It's just sort of funny, right? That no one can give us an accurate snapshot of the outstanding private student loan dollars in Connecticut. And that's not to anyone's fault, because that's true in, 45 other states.
And
But
certainly, Winston, we can talk about this,
Yeah.
offline, but I'm not sure if we've ever gotten the request for that data.
If I can also add, as a student borrower here, my role is to represent student borrowers, that the reality of it is that Winston is correct, right? We've seen at the national level, we've seen how student loans, private student lenders have, there's been lawsuits, there's so many different ways that I think being able to gather enough data, to your point, Winston, being able to know, even at the aggregate, to be able to see what is happening in the state of Connecticut, how are those lendings working within the constraints that you're mentioning, Matt and Fred, of course. But I think that there has to be some transparency and the ability to get that information without having to go through a process to require all of that for the benefit of borrowers, because we are being asked to borrow that money without necessarily always the transparency, or we're expected to do all the heavy lifting to get all of that transparency. So I think it's really important, especially because we've seen, to the point, whether it's a good actor or a bad actor, the reality of it is that these things are essential, because we've seen what happens when otherwise that is not, when we don't do those things, right? And so we are in the mess that we are in partly because of that. So I think it's important to have that as well, as a student borrower, or as a representative of student borrowers.
Sure, I think more of my point was that we're not withholding information. I'm not sure if we were asked for it.
Right, and I guess what I'm saying is we shouldn't have to be asked. It shouldn't have to be asked, right? It should just be available.
But if we don't know what you're looking for, it's hard to make that available, right?
So,
Point?
Yeah.
If I could jump in on this, Matt, having been, at the DOB, I appreciate very much, what you're saying, but not having been asked doesn't mean that the DOB can't go ask its licensees for information.
Absolutely.
Right.
Sure.
So transparency and student loan servicing are not two things, two great tastes that go great together. Right. And they should be on a charm offensive right now. And I would think that a well-meaning regulator or a legislature that put it out to the industry, looking for aggregate data so that, you know, a state can understand the marketplace, is a hard request for that industry to fight, at least fight publicly. Now, all that said, I'm popping a bunch of popcorn so I can watch this play out. But I think it's a conversation that needs to happen.
And just to the point that the market I meant to propose is currently not a licensee, right? So although a regulator always has plenary authority over generally financial products and services in their jurisdiction, that's a proactive and often like subpoena-based, frankly, set of authorities. It's really an authority that's limited to subpoenas and investigations for infractions of set federal state laws. Whereas when you're supervised, right, you are a licensee, you are something else where there's a regular cadence of being in touch with that institution, reporting, examination, supervision, et cetera. So the idea here is that just the way the laws of the land are currently written, the vast majority of non-bank private student lenders currently don't have that closer regulatory relationship with the banking agency. So it's whether or not folks are being asked for it, I suspect that most of that data doesn't currently live and would have to be accomplished via piecemeal upon a request. So the idea here is just, I promise I will stop, is just, you know, there's a level of reporting that is helpful without having to go full blown, we're going to license you. And a registry is an interim step that can be used to decide whether there does need to be a special student lending license in addition to the consumer lending license, which I think has a 12% APR threshold. And if the answer is no, then the registry has been successful on that front, right, and continue to inform policy. I think that's how the other states have been approaching it.
Okay, this is an exciting.
Oh, by the way, I should say
subject.
our licensees are servicers, not lenders.
All the more, yeah, exactly. And I didn't mean to, you know, that's and Rep. Doucette and I tried to clarify this earlier too. One could make the request from the licensees, but I'm talking more about the origination side of it, which is where a lot of that underwriting happens, a lot of the rates are set, et cetera.
Which is what we don't, which we don't regulate.
Exactly. So the proposal here would be to have that interim regulatory step of just collecting the data through a registry and opening the door to further regulation if that seems appropriate down the line.
Is there a proxy for, you know, what you're looking here in the private industry that's produced, you know, from the federal lending?
Yeah.
You know, it's 95% of the business.
Yeah, if you go right now to the Department of Education's website, you can download quarterly reports broken down by state, by other demographic information, and by a loan portfolio. So you can get to the fiscal quarter snapshot of what's going on in that larger market, but you just can't do the same for the private student loan market. And the interest rates are all set by statute at the federal level, so you can also look that up, and there's no variation across.
So that my understanding is, you can easily download, you know, program type and school that you're seeing disbursement to. That's roughly what you're looking for. I'm curious about your comment here around underwriting standards that, to Matt's, you know, prior comment, you know, are generally deemed proprietary across all, you know, lending institutions, not specific to student lending, but, you know, any type of asset class.
Yeah, I think that's a good point. And I don't mean to have overextended it. If I can recall, the other states, I don't know that they've actually gone into underwriting standards so much as like portfolio health, like who's performing, who's delinquent, you know, percentage performing, delinquent, collections, et cetera, which is the equivalent to what you'd find at the federal level. So I will walk that back if I inadvertently brought us into underwriting land. And it's really more about understanding the snapshot than it is about proprietary business practices.
Yeah, I mean, it strikes me that, and sorry, just one last point, that you know, there is, I think, a lot of, you know, middle ground here. You know, Citizens, we are a member of a consortium of lenders that actually does produce a significant amount of data on the overall performance of the private student loan market. You know, where we contribute our data in, you know, that shows that the overall outcomes that our borrowers are achieving are actually really generally really good, right? That the majority of them are paying and being able to remain current with that. You know, it's not something that is able to be cut, you know, by state to be able to say within the you know, Connecticut, for example, but certainly something. So I do believe, you know, there is potentially some middle ground, you know, around this.
Okay, so let me try to bring this home It's a good discussion. That recommendation 4 was something that was just jotted down after Winston raised the point at the last meeting. Could I ask everyone really, but especially those who have talked on this point, Winston, Matt, Fred, if they want to make some suggestions as to what that should say. Again, we want to raise the issue. We don't need to make a determination, and if we want to caveat anything, certainly as it pertains to underwriting standards, based on our discussion just now, we should definitely do that. So if you guys want to take a crack at, and we don't have to do it right now, offline, and again, if after we end end the meeting while it's still fresh in everybody's heads would be great. If you wanted to just send a short suggestion or another way to rephrase what is in recommendation 4 here that you would suggest to make it perhaps more neutral, identifying the issue and without making any pronouncements. That would be good. Sound good? Okay, so then we're gonna move on to
Good.
recommendation
Sounds good.
5, which is another big issue that might justify some popcorn being popped on what is the drivers and causes of cost and tuition increases within higher education. Again, I think we should certainly. I think we could all agree that we could certainly benefit from having more information on this point. Again, without making any pronouncements or judgments, but about what the outcome or the answer to that question is, but just simply to say that we need, we would all benefit from having more information as to the cost side of the equation here. Anybody have any other thoughts on that?
It's a good point.
I would just add that cost is not the same as price, and I think we need to start referring to what people pay as a price instead of a cost. And there is research out there that shows that the sticker price on a tuition goes up with concomitantly with the availability of government credit or the availability of credit. So the more dollars that are out there to pay for college, the more college they charge for college. And
so that's a good point. I mean, what would you say about saying more research necessary on the drivers and causes of the price of higher education?
You could say price tuition pricing increases. Because obviously that implies that the research is necessary to look at the difference between the actual costs and the actual price.
Yeah, the price of, that's right. Okay.
Yeah, I would say the only thing that I would say is like not just tuition, because tuition is part of the overall expenditure that students are expected to have, but we also have room and board. That's extremely necessary for a lot of students. So I think also just encompassing
comprehensive. It should be the comprehensive cost.
Yeah, that's a very good point, because the largest margin is in those associated, meal plans and residency and all that. Yeah.
Yeah.
The overall price of higher education.
I would go with comprehensive. I think.
How about total?
Total's good.
That's a mathematical word.
Okay.
Are we good, or are we going to create another task force at the moment?
No, I don't think we need to do that.
Bite your tongue, Don.
To do that. All right. Anything else that we didn't cover today? Any other recommendations? I think this is good, and in my mind, I think covers all of our conversations. Whether or not it covers everything again within the broad issue is another question. But I think this is a pretty good summary of what we discussed.
Do we technically need to vote this out, or do we just make the changes we discussed? And
No, I would say, and I'll entertain other thoughts or comments on this. I would say that again, this is a product of the discussion. It's meant to reflect the discussion, and not to make any pronouncements unless they're clearly ones that I think everyone can sign on to, like increasing scholarship aid. I don't think is anything that I've heard anyone object to, and I'm not sure I can think of a reason why we wouldn't want to make that recommendation. So something like that, but these other ones here, like gathering more research, capturing more data, I think are things that I think we are unanimous. Anyone can correct me if I'm wrong, but I think these are neutral enough in their application that I would say that we don't necessarily have to vote on it. I think we can agree that this is what we discussed. Anybody have any thoughts on that?
Would there be? Should we circulate one more time with these latest edits, or what are your thoughts on the rest of the process from here?
No, I would think, we see the edits here. I think the only other thing is where Don wrote edits coming, I would want those who spoke, we could do it right now, but I would want those who spoke on this issue to provide some thoughts on that. I think what that one should say is recommendation for,
what Rep. Doucette would for that to the extent it's which I understand, the underwriting, just amending that middle clause, including portfolio volume and performance. And then it still is pretty high level in terms of what we're looking for is data. We're mentioning that other states have done a registry, but it reflects more of a snapshot than a rigorous sort of sunlighting of private practices.
Yeah. So in other words, say including portfolio performance, just add that to the list, in other words,
or even replace the interest rates and underwriting if those were areas that other folks on the working group weren't as comfortable with, and volume and performance or something, just to reflect. We're just looking for the dollar amounts, right? We're looking to understand.
Going here?
Yeah.
What am I?
If that works for the other folks. I suggested portfolio volume and performance, but of course, happy to hear from my colleagues on the working group if they feel differently.
Volume and performance. Yeah. That's portfolio volume.
Thank you. I knew I missed a word.
Yeah. Fred, does that does that make sense to you?
Yeah, that does make more sense to me, and is more commiserate with what kind of a consortium of lenders produces on a national in terms of the overall book of business, not specific to the state.
Yep. Okay. All right. So, but
I might suggest, instead of perhaps create a lender registry, investigate the creation of a lender registry.
Yep. That's perfectly valid. Yep. I endorse that change as well. Yeah. So by investigating or
looking into
creation.
or
looking into the creation. Yep.
If if I can make one minor edit to the first recommendation, because I would kick myself if I didn't, where it says 2008 funding in any event consumerate, I think it would be said with the goal of being consumerate with, right? So like we can start with the least, but then with the goal of perhaps getting, instead of just in the event of.
And yeah, right. So it should say recommendation 1, Dawn, at least 2008 funding and in any event. Not it. Yeah. Take out the word it. Take out the word it. Commensurate with. So, and what else in there, Krista? Anything else?
At least to 2000 funding and in any event consumerate. So in any event with the goal, something along the lines of with the goal of being, however you want to
of being, yes, commensurate. Yeah. Yeah.
Okay. Got it.
Yeah, that's good. That's good. Okay.
Yeah, quick comment on recommendation 1. A lot of that's also going to have a look at the out years on the budget, because there's a lot of money floating around right now. But you look out 2 to 3 years from now, and that money's not going to be there.
Yeah, no, I think it's noted that, yeah, obviously that larger question of where the funding comes from and how much is outside of our purview, but I do think it's fair to say that, the group thinks it should be a goal to try to fund the estimated need relative to the cost of higher education. So I think that's what we're saying here. Again, without going too far to say that, we should allocate a specific dollar amount. What do you think?
I think somehow there needs to be a reference point on that pertaining to fund availability conceivably.
You can also, we can also frame it in the sense of prioritization of funds, right? So within fund availability and through the prioritization of, education. So yes, through fund availability, if that's how we want to add it.
So how about before it says at least a 200 funding, we could say subject to available funding.
Yeah, that's exactly what I was looking for. Is that
and then take out at least say to 2008 funding and in any event. I think that's good. I think that's good. All right, so I think we're drilling down here a little more. Is there anything else? I think with this, is everyone, I guess the question is comfortable with what we have here without having to take a formal vote? And fine, we could take.
I was just reading the statute again too, and it just says, CHESLA in collaboration or whatever it says, shall submit a report of the working group. So there certainly is no procedure that must be followed other than, I think, us nodding our heads and saying, go for it.
Yeah.
Right.
Go for it.
Okay. All right. I think that's a good note to end on.
Agreed.
All
Great.
right. So I think that's it. Again, thank you everyone for your participation. This has been great, and please keep in touch. I did also want to note, and Josh pinged me while we were in the meeting here, that there is another meeting. So, the work never ends. This one is being convened by the Higher Education Committee, Higher Education Employment Advancement Committee, and it's happening this Thursday at 1 p.m. And several of our members are panelists on this discussion as well. It's a forum entitled Student Loan Debt in the Time of COVID-19. So to be continued. And best of luck to those of you who are participating in that, and certainly feel free to give us a shout out. I may be able to join you as well, at least in the gallery, so to speak, on Zoom. But also, I would say, I think the banking committee is going to be convening soon, and this is on our list of things to discuss. And it remains to be seen whether or not the committee would want to flesh any of this out into a legislative proposal that's ready for this session. Keeping in mind the fact that it's a short session and that we're getting ready to start within the next couple of weeks here, and then we have a super short time frame which to formulate and get the bills on for hearings and so forth. So that remains to be seen. I would say it's more likely than not that we'll see something relating to this topic on the agenda for the banking committee. And if and when that is the case, I would encourage you all to continue to stay engaged and in contact with all of us. So that's all I have. Jeanette, any other parting thoughts?
Yeah, I just wanted to reiterate my thanks to all members of the working group for your participation, your time, and your input. I think it's been a very good process, and we've had the opportunity to get to know each other a bit and hear different perspectives. So I think it's been very worthwhile and much appreciated.
Awesome. All right. With that, thank you so much, everybody. And we hope to see you. We hope to see you soon.
See you soon.
Yeah,
Thanks, everyone.
thank you.
Thank you,
Take care.
everyone.
Bye.
Thanks all. Bye-bye.
Bye.
Bye-bye.